morning. You're watching Business World Live. I'm Danie, Laurel.
And I'm Delos Santos. It's the start of a new trading day, but first, let's go straight to our top story. The International Monetary Fund expects the Philippines to experience the worst economic drop in Southeast Asia this year, as the lender downgraded its forecast for the country. The IMF now sees a contraction of 8.3% for the Philippines, deeper than its growth outlook of negative 3.6% in June. If realized, this contraction would be the biggest on record based on IMF data since 1980. The multilateral lender sees a contraction of 7.1% for Thailand, 6% for Malaysia, and 1.5% for Indonesia. Only Vietnam is expected to post growth at 1.6%. The IMF says recovery prospects for the global economy are likely to be long, uneven, and uncertain, with some emerging markets and developing countries still grappling with rising COVID-19 infections. For the Philippines, IMF country representative Yong Zheng Yang says the pandemic is expected to weigh on private investment and consumption, as well as public confidence and remittances. Bangko Sentral Governor Ben Jokno himself expects the country to shrink deeper this year. He now forecasts a contraction of 7 to 9% from an earlier projection of 4.5 to 6.6% contraction. Jokno says the country may rebound by posting growth of 6.5 to 7.5% in 2021, while the IMF pegs it at 7.4%, higher than the June estimate of 6.8%. All right, Dan, moving on to markets, a budget deadlock here finally, and a stimulus deadlock over in the United States. No one wants to compromise.
Exactly. So in both sides of the pond, let's say, so many arguments here when it comes to spending money and whether that money should be spent right now or should we be waiting. So let's kick off with what's happening over in the United States. So as you recall, there's been a rather fiscal stimulus deadlock between the Democrats and the Republicans, wherein the Democrats are pushing for $2.2 trillion worth of a stimulus. And then all of these things where President Donald Trump said that they will not be discussing this until he wins the election, so to speak, on November. Now, right now, there's still a lot of push for that fiscal stimulus, especially as the Fed Chair Jerome Powell said they needed it right now if they are to see a recovery. And those prospects to happen before the November election seem to be dimming on Tuesday. You've got House Speaker Nancy Pelosi demanding the Trump administration to revamp its latest offer, but they're actually pushing an even smaller scale strategy that even President Donald Trump himself seems to have rejected. So he tweeted, "Go big or go home," seemingly in response to an even smaller package that the Republicans wanted to push forward. Now, another thing that's going on over in the U.S., banks had dragged down the S&P 500. You've got JP Morgan Chase, Citigroup, having sank. That's as investors were worried that the third quarter earnings are signaling just a pause in pain from these stocks that have been, hit, especially because of the soured loans. So a lot of earnings coming out over in the US. Another thing dampening sentiment, you've got Eli Lilly, that dropped after saying that an enrollment in a government-sponsored clinical trial of its antibody therapy had been paused out of safety concerns. So again, another COVID-19, not necessarily vaccine, but treatment here, again, stopping the clinical trials because of safety concerns. So when is this vaccine ever coming, Jess? When are these, reprieves ever coming? Doesn't seem to be anytime soon. And you can see on my terminal here how the Dow Jones and S&P 500 were down by 0.6%. Meanwhile, you're going to be seeing Asia opening a bit on the back foot, so to speak, but it is a rather mixed picture here. Yes, you've got Japan down in the red, the Nikkei 225 down 0.1%. But over in Taiwan, it's actually seeing some little gains here. That's up by 0.05%. But the rest, for example, in South Korea, the Kospi is also down as well. So not a very clear picture of what's going on. Now, traders are going to be watching a speech today. There's going to be President Xi Jinping over in Shenzhen in China, where he is expected to lay out a vision for the region's growth. So again, you've also got Korea looking to keep its interest rates on hold. Guess what? They are seeing signs of economic improvement. So buti pa sa Korea, Jess. Now, one thing I want to be looking out for is Apple. It's not very often that we take a quick peek at some US stocks, specific stocks here, but one exciting move for Apple is that they have joined the 5G revolution when it
Mm-hmm.
comes to their smartphones. So get this, they've got 4 new iPhones that was launched yesterday. That's going to be the new standard. And of course, this high-speed wireless technology. They're saying today is the new era for the iPhone. That's according to Tim Cook, their chief executive. So of course, going to have higher quality video streaming. But
Mm-hmm.
also, so this is now called the redesigned iPhone 12, diba? So last year they launched iPhone 11. There's going to be a starting price at 799 US dollars, and that's going to be starting from October 23. Now, an interesting point here, they of course followed Samsung and Huawei in this technology. They're not necessarily the first people or the first, technology makers coming into 5G phones, but they are saying that, this is actually a reasonable price point. So that's what investors are watching out for here. It's actually trying to get back and revive the smartphone market. Recall that total smartphone sales were down 16% year on year in the second quarter. That's according to research firm IDC. So people had stopped buying smartphones and they're trying to make the price points less prohibitive to people. So again, that Apple iPhone 12 with 5G capacity out now over in the US. Let's see whether we get that here in Asia. But nevertheless, Apple down as of the last trading, down by 2.7%. Now let's move over to our own local index. Tuesday saw us sliding back down. We ended in the red, down 0.2%, but it does seem that we are picking up. We're closing in on 59.30 here. That's up by 0.09%. Now, what was going on yesterday? We had reported the same thing, basically spilling over until the end of the trading day. The speakership row at the House of Representatives that now seems to have been resolved, but a lot were saying that just because of these tensions, that might cause a delay in the passage of the budget. So we're waiting for that. But we have had, of course, reports saying that they will now be cooperating to pass the budget on time, according to spokesperson Harry Roque. There was also, of course, this potential setback in the vaccine over in the US that I had mentioned earlier. But others are saying maybe investors are saving up for the upcoming 29 billion peso IPO of Converge. That's going to be in October 26. And there's also a share sale of preferred shares of San Miguel on October 29. That's 20 billion pesos. So baka people are just setting aside money for that. Now, just a quick peek at our sectors here and how they are opening this hump day. A bit of a mixed picture. Properties still on the back foot. That's down by 0.5%. Industrials as well. But holding firms enjoying some ground here. That's up by 0.4%. Now, speaking of holding firms, I just want to report a few things on some of our biggest conglomerates. First of all, GT Cap. I just want to take a quick peek at that because that had rallied the most since June. That's as the car maker, of course, sales had jumped. Now, recall, you had mentioned that in your speed desk, Jess, that there was an improvement, 37% improvement in vehicle
Mm-hmm.
sales from the month before. And take a look at how that stock closed yesterday. That's up by
Mm-hmm.
4.2% even in just the past 3 days. So another one I want to check out here is SMC, San Miguel. We had reported yesterday they got the go signal for the 50-year franchise for the Bulacan Airport. Another good news for this player is that they have now completed Skyway 3. So that's good news for me, of course. And that completes a 17.9-kilometer Metro Manila Skyway project that links southern and northern Luzon. It's now going to be an alternative to EDSA. No need to pass EDSA na, Jess. It's pretty exciting. And according to them, with the road's completion, travel will be cut from the south to north Luzon Expressway to 20 minutes
Mm-hmm.
from what is right now around 3 hours, Jess.
Wow. All right, from infrastructure, let's move on to something to lighten up the day. Dan. Well, surprisingly or not, maybe sales of cigarettes and alcohol shot up actually during the lockdown. Is this what LTG is banking on for some developments there?
Maybe because LTG of course owns PNB. Of course, they've also sold some assets there. To support the
Mm-hmm.
provisions and the loan losses. They've also had a big hit from PAL. But one sector that's been shining is not just tobacco. So tobacco sales going up, but also alcohol sales, and that seems to have
Mm-hmm.
gone up even despite the alcohol ban, diba? So maybe they're banking on that. In fact, Asia Brewery and Heineken have realigned their partnership here in the Philippines. They've agreed to transition the venture into a new partnership structure. So basically, they will produce and distribute Heineken and Tiger beer. And this is Heineken, they'll be setting up a sales and marketing office in Manila to engage Asia Brewery to brew and distribute beers in the country. So expected date for this process is December 31 of this year. So can you imagine that amidst the pandemic and amid a lot of businesses closing, they're actually going to be
Mm-hmm.
creating a production facility for Heineken beer plus a sales and marketing team. So pretty exciting there. More on markets, of course, later on in the
Cheers to
broadcast.
that,
We've got
maybe.
Regina Cap. Cheers to that, Jess. Okay, so let's head on to something we're keen on keeping an eye on as well. That is remittances. So which has so far been seeing a bad year, but it was rebounding naman, better than expected in the past couple of months. But what
Mm-hmm.
is IHS Market saying about how sustainable that rebound will be next year?
Maybe not as sustainable as we expect, Darren. You have
Okay.
IHS Market saying that they are expecting the slide in remittances to continue, in fact, all throughout the year. I mean, for the remaining months of the year and even all through 2021. In fact, they're saying levels won't really meet pre pandemic levels, especially since you have a lot of OFWs already losing their jobs overseas. In fact, if you try to take a look at the records as of August, already 178,000 overseas Filipino workers have returned to the Philippines, and the government is expecting more to follow suit. In fact, they're begging that around 300,000 OFWs will be returning to the country this year, especially since you have a lot of offshore companies streamlining their workforce as well, resulting to a laying off of workers. IHS Market is saying, they're expecting, or at least they're projecting, that maybe around 8% of OFWs may have already returned home. That's, of course, basing it from a previous overseas Filipino data that we have over here. Now, Rajiv Biswas of IHS Market is saying there should be lower inflows in the coming months and all through 2021. So to give you an idea already, like what you did mention, we did see remittances experiencing an uptick, at least for the month of July. That was up 7.8% to $2.8 billion. That, in fact, is the highest in 7 months. But nonetheless, remittances are down by 2.4% to $16.8 billion as of the year. And IMF is saying, that uptick that we saw in July might actually just be due to the fact that migrants were reaching into their savings to send money to their families here back home. And according to ING's Nikki Mapa, that rebound may not in fact be sustainable. They are expecting contraction in remittances up to 2021. They're projecting that to drop by as much as 10% this year and register a flat growth by 2021 as well. Now, according to ING's Nikki Mapa, that plunge in remittances makes the recovery harder as authorities really bank on domestic consumption for a bounce back of the economy. So they are expecting at least remittances to provide less or limited support for the Philippine peso next year as well.
Okay, so a bit worrying there, Jess, in terms of, what's supposed to be our saving grace right now might actually need the saving. Now let's talk about what
Mhm.
they are saying about the Philippine economy when we look domestically as a whole.
All right. So if you try to take a look at the economy, in fact, quite close to how IMF is calling it. They are expecting GDP to shrink by as much as 8.2% this 2020, and then in turn by next year might actually see a positive growth of 7.7%. That is if a vaccine becomes available by then. Over the medium term, they are seeing the Philippines returning to a 5 to 6% annual growth path like we've been experiencing pre-pandemic. According to IHS Market, a strong phase of expansion will be underpinned by growth pillars of renewed strong expansion in domestic consumer spending, as well as rapid government infrastructure spending, the exports of manufacturers, and IT BPO services. At the same time, they're also banking on higher foreign direct investments They're saying that would actually help sustain growth, especially since, as the Philippines tries to be competitive in the region and as the country tries to position itself as an ASEAN manufacturing hub.
Okay, Jess, well, let's hope for that recovery to actually start taking place. Meanwhile, I just want to take a quick check on the local unit for you, especially since we're talking about
Mhm.
remittances. Weakening a touch this morning, actually trading at 48.62 to the greenback.
Now, here are other headlines we're keeping our eyes on. Apart from the pandemic, exporters are now fearing the risk of job loss after the European Parliament threatened to suspend the Philippines' tariff perks under the Generalized Scheme of Preferences or the GSP Plus program. European lawmakers voted to revoke tariff incentives enjoyed by the Philippines due to alleged human rights abuses under the Duterte administration's war on drugs. More than 6,000 Philippine products enjoy zero tariff entry to the European Union under the GSP Plus scheme. Trade Secretary Mon Lopez had downplayed this development, saying the pearls may likely be retained. Perks, rather, may likely be retained. The Philippine Exporters Confederation likewise said the country does not fully use the GSP Plus benefit. But others, such as the United Coconut Association, think some industries, including those that export to the EU, could become less competitive if the tariff perks are removed. The lack of trade incentives, the group said, will lead to higher operation costs. Other exporters, meanwhile, fear the loss of tariff incentives could result in lower sales and joblessness in their sector. Some are now considering prioritizing other markets such as the US, Canada, and the Middle East. The EU had been the country's fourth largest economic bloc destination for exports in 2019, taking up 10% market share. Now, moving on to other stories, the Finance Department is calling on Congress to immediately pass two pending fiscal reform bills that will aid ailing businesses amid the pandemic. Philippine Star reports that the DOF wants the immediate passage of Create and Fisc Bill, which could provide further stimulus to businesses battered by COVID-19. Citing a report by the World Bank, the DOF said the measures are critical for MSMEs, which comprise over 99% of local businesses. Finance Secretary Sonny Dominguez earlier said that the immediate reduction of corporate income tax under Create would free up some 37 billion pesos for businesses, which would allow them to expand their business. The FISC bill, on the other hand, would allow banks to clean up their balance sheet by disposing non-performing assets that in turn would give them more room to fund sectors in need. The two measures have been passed by the lower house and are currently pending in Senate.
The ERC will order power distributors to extend the moratorium on power disconnections until the end of the year. The regulator said they are now readying the advisory asking distribution utilities to defer power cuts due to unpaid bills. That's until after December 31. Meralco, for one, is due to lift its self-imposed moratorium on disconnections by the end of this month. The country's largest power distributor started freezing disconnections in April. ERC acknowledged the initiative of some power distributors to declare their own moratorium even without a government order. Late last month, the Energy Department also ordered industry players to extend the grace period for bill payments under the Bayanihan 2 law. With more growth downgrades, the government has accelerated its reopening. That's despite the rising number of cases. Is the government doing enough? Here to share with us how investors are responding to the latest moves and data, we have with us Regina Capital's Alvin Limlingan. Good morning, Alv, and welcome to the broadcast.
Hi, Danie. Thanks for having me.
Alv, let's kick off with the banner story here, which is, again, we thought that the pain was already over. We thought that 16 and a half contraction in the second quarter, could not get any worse, and that it would be positive moving forward, especially when it comes to third and fourth quarters are supposed to be our star quarters. What's going on here? Why the even further downgrades worse than expected, which was already pretty bad to begin with?
Well, I think in the early part of this crisis, we had a bit of wishful thinking. We thought that we'd be locked down and eventually there'd be a vaccine and life would go back to normal. Unfortunately, it's not. Life is very far from normal. You only have to look at um, curtailment of transportation, curtailment of tourism, and you'll see that while maybe the virus may be somewhat under control, relatively speaking, we can't go back to normal business activities. So the economy is definitely going to take much longer to recover.
But what is the market pricing in terms of the third quarter? So a lot are waiting with bated breath on what those numbers will be. I think estimates right now are at 8.8% contraction according to Bloomberg.
Mhm.
What's gonna be a good figure? There's no good figure, right? But what's it gonna take for markets to say, okay, it's not as bad as we had expected?
Um, well, 8% is the consensus. So if you're a contraction, of course. So if you're a
Mm-hmm.
little less than that, then that's much better. But
Okay.
there are very few signs for us to be hopeful for. No? Between the second quarter and third quarter, I'm not really aware of any dramatic changes in government policy. We've basically
Mm-hmm.
been under MGCQ this entire time. So there's not that much to hope for.
What about earnings of companies? We're waiting for the third quarter earnings results. Again, largely expected to be worse year on year. But when we're talking quarter on quarter, are you expecting better than expected, better than consensus, or possibly even risks on the downside?
Well, that's a very interesting question. Basically, this crisis has created winners and losers. So you're seeing a massive bifurcation in earnings. So if you're a company where basically your business model has been decimated, let's say you're Cebu Pacific, there's really not much you can do. No, people simply cannot fly, or it's greatly restricted. Certainly, the leisure market is gone. So that one, you'll see a dramatic deterioration in earnings. There are other companies with consumer staples like Pure Gold. Pure
Mhm.
Gold is fine. In fact, it's thriving because people still need to go groceries. In fact, you can argue that there are more people doing groceries now, cooking at home, consuming at home than previously. So they benefit. So there's a wide bifurcation in earnings depending on how your particular industry was affected. So you can't paint a general picture. You'll have to go per industry.
Okay, but let's talk about those industries that at least you believe are bouncing back and pulling in the weight. Which ones are you more, were you surprised about, or are you expecting to be surprised about when it comes to the third quarter figures?
Well, it's still consumer spending, no? So you have to ask yourself
Okay.
what's going to do well here, given current government restrictions. So certainly the telecoms will do well. You have more people uh,
Mhm.
using internet at home, such as what we're doing now. You have people consuming more at home, such as the groceries. So things of that nature, you just have to look at the current set of restrictions imposed by the IATF and ask who will thrive in this environment.
But when you're looking at which ones to be picking up, Alvin, should you be picking up those ones which are currently thriving, or the ones that have been, like you said, highly depressed, like airlines, hospitality, leisure, that are very, very oversold, and that might be a good chance to be actually, taking a chance on them now, optimistic on what's going to happen in maybe not in the near term, but in the long term?
Well, okay. So it all boils down to pricing. So we can go through
Mm-hmm.
individual securities and look at how they are priced, and we can give you a view on this. But I think what you should be thinking about is what do you think the market expects and what do you think the reality will be, and see if you can trade the difference. So let's take aviation as a simple example.
Mm-hmm.
So there have been pronouncements that there'll be tourism bubbles and more domestic tourism and staycations and things of this nature. So one might lead you to believe that there might be a slight rebound, and on this basis, we can buy companies who benefit from this accordingly. But I think personally, this is much, you're exceedingly optimistic in this regard. So on one hand, I think people are just afraid to go out. It may be safe, but if you're not willing or you don't want to risk uh, the health of your family, no matter how good these deals are, people will simply not go out. So things of this nature, um, what do you call it? Consumption.
Mm-hmm.
I forgot the term. Consumption on the base.
Discretionary, yeah.
Discretionary consumption. Thank you.
Yeah.
I think it's much. People are afraid. People are worried about the future. So
Mm-hmm.
you won't see. I think this will last for a long time.
Speaking of airlines, let's talk about LTG because I just see in my terminal here, it's actually the best performer
Yeah.
right now, and that's so interesting because PNB had been selling some stuff, to fund, of course, those loan loss provisions, and then you've got PAL also letting go of a lot of people, and then them still investing in a brewery in this period of time. Does that make sense to you? What does that say about their strategy moving forward?
Well, again, there'll be winners and losers in this time. So PNB, they're trying to maximize the return on their real estate. For the airline, it is what it is. There's not much they can do about it. So you're seeing a redeployment to areas that would potentially thrive, such as Heineken. I think these depressing times will cause people to drink more. It's certainly something you can do at the safety of your home. It seems to be a higher end brand, so they're tapping maybe a market they were not tapping before. So that move makes sense. Now, finding the new businesses that will thrive in this new era.
What's your general sentiment on conglomerates, Alvin, as a whole? There was this report, actually, it was in Bloomberg, saying that the conglomerates will be suffering more during this period instead of actually having the diversification of risk. And it's actually the more focused players, like you mentioned, and maybe consumption stocks, telcos that might be the clear winners here. What's your take on holding firms?
Well, maybe I'd reframe that. So if you took, let's say, a standalone company, let's say uh, Cebu Pacific, that clearly won't thrive in the next 2 to 3 years
Okay.
because we don't see discretionary leisure travel anytime soon. But let's say you take a standalone company, again, let's say Pure Gold, that will clearly thrive. Now, the conglomerates are a mixed bag. They're going to have some winners and they're going to have some losers. So it's somewhere in between, and you'll have to look at it on a per conglomerate basis. If you look at Philippine conglomerates in general, the big business groups, there tends to be a bank there. So that bank will probably
Mm.
deteriorate somewhat because of loans. They tend to be have at least exposure in property, and property will probably not do so well. Again, when people are worried about their futures, taking on a new investment as a condominium may not be something that's a priority.
Mm-hmm.
So these sort of traditional drivers of wealth pre-COVID are probably less enticing now.
Okay. Alv, final question on Converge IPO, which seems to have had a good reception offshore, but
Yeah.
nevertheless was priced at the low end. But still, people are saying mahal pa rin, even at
Yes.
this cut in pricing. Are you betting on that? Will you be picking that up, or should we be waiting for a, so to speak, correction in the pricing?
Well, it depends really on your investment horizon. We have some clients who maybe want to take a gamble and do a quick punt on IPO day.
Mm-hmm.
And I think there might be some support among the underwriters and for
Okay.
that. No, but if you're looking at a long-term investment, I think it's richly valued. I appreciate the arguments of the foreign investors. They're saying it's a growth play and so forth. But the price at which it is being offered relative to peers, I think its PE trades at 7.5 times their peer companies,
Mm-hmm.
Globe and PLDT and Telephone. And I don't see anything glaringly innate about this
Okay.
company. I mean, they have superior infrastructure, but this is something that the other big players can catch up in time. They may not be straddled with legacy infrastructure, but the nature of technology allows companies to leapfrog. So maybe they're ahead now, but sooner or later, the next great thing will come up, and maybe their infrastructure won't be the best.
But Alv, what's a fair price for you?
well, well, we think at the figure
Even
closer.
multiple wise, right?
Yeah. Certainly not 7.5 times their PE. No, much less than that. I mean, it really depends on your strategy. If you're a growth investor or growth or value investor, and we're really more for value when it comes to these things. We view it more as a utility. So we'd
Okay.
be much more attracted to it if its PE multiple approach that of its peers from a
Okay.
value perspective, because we don't subscribe to the growth argument so much.
Okay, so a lot of excitement there. This depends how short or long your time horizon is. Thank you for those insights. That was, of course, Alvin Limlingan from Regina.
My pleasure. Thanks for having me.
And that's a first look into the business day. Today is October 14, 2020. I'm Danie Laurel.
Catch us again tomorrow at 9:30 a.m. I'm Jess De Los Santos. We are One News.